Good morning. Today I'm doing a video on exactly what the morning brief is trying to do. How does the morning brief help you? First of all, the morning brief is a shortcut to you doing or having a morning routine. Your morning routine every morning before you trade should include at least what we're covering in the morning brief. It should cover news items that will affect the market that you're trading. You want to look at long-term charts, looking for support and resistance, which includes patterns. We'll be looking at double tops, double bottoms, flags, head and shoulders, wedges, trend lines. We'll also be looking at something most people don't look at, which is inventory, which tells us the aggressive direction that is currently happening in the market. And we'll go into that in detail in a few minutes. And we want to look at the short term. Again, looking for patterns and short-term resistance, short-term support. And that's what we cover in the morning brief. Now, we're going to go into some detail now. So first on the agenda is news. Now, you can see from here that I'm using forexfactory.com calendar. And this is a free site, and it's for Forex. But it does a great job of giving you the news that is relevant to the markets, as well as whether it's relevant to certain currencies or certain countries. Now, obviously, we're only interested in the U.S., but they do a great job of ranking. You can see they have some yellow and orange and red. Well, you can put your mouse over that, and it'll say high impact expected for that particular market. So we go down here. This is Friday, February 3rd's news, and it has average hourly earnings at 8:30 in the morning. This is a high impact expected. Now, if you don't know what average hourly earnings month over month is, you can go to this little tab right here. You can click on that, and it will give you exactly what it is. So here we clicked on it. It's unemployment rate. So it says it's from the Bureau of Labor Statistics, and gives you all the information about it, okay? You can then close that and it goes back. So if you don't know what these red items are, you can just click on that and it'll give you a description of it, where it comes from, how important it is to, or how it will affect the currency. In this case, most of the time it's the market. And so it's a very, very useful site. Now, you can use Bloomberg.com, CNBC.com, all have news that are relevant to the market. So you don't have to use forexfactory.com. It's just what I use. You should use a service that can identify what is going on and what's important to make the market move. Now, just as an example, this 8:30 number that came out, these three 8:30 numbers, gave us a giant spike, and this is an S&P 500 futures contract, the March contract on a 1 minute, and this is boom. And look at this. This is almost 30 S&P points, 30 S&P handles, and actually the low here at 32, 72 to 32. That's 40 S&P handles or 40 S&P points. That's huge. You obviously don't want to be trading when this could go up or down. You have no idea what will happen, and this is why you go and look for the news to see what's going to happen, when it's going to happen, so that you can not be stuck. What if you were stuck long? I mean, if you didn't have a stop, you gotten screwed. If you do have a stop, you still got stopped out. I mean, really, really ugly scenario. So you want to be super, super careful about knowing when news is going to be happening and how it may affect the market. The next item on the list here is long-term chart, and we're looking for support and resistance levels and direction of the trend, etc. And we'll look at a few of these patterns. I'm not going to explain these patterns, but these are the type of patterns that we're looking for. So here is a daily chart, and that's as far as I'm going to go back long term. Is a daily chart that goes back about, if I can really scrunch this up, it goes back a year or more. And I want to look at this and see. You can see that I've gotten some things drawn on here over here I have a volume profile. Well, the volume profile is useful in finding areas of support and resistance. So these high volume nodes, which is where there's lots of volume at a particular price, is a place where there's going to be resistance and or support. If we are above it, if these big spikes are above it, then it'll be resistance. If it's below it, it'll be a support. Same with the low volume nodes. Each one of those low volume nodes is an area of support and resistance. So this is a great place to identify specific levels to find support and resistance. Now you can see I've got a trend line on the top drawn and a trend line on the bottom. This would be a wedge pattern. And we've broken out of the wedge. You can see that. Here we have a short, very, very short term bear flag. So there's the pole, the flag pole. There is the flag. Here's a bull flag. We went up, created a bull flag pole, and then we went sideways. That's a bear, I said a bull flag, and then we have broken out. And I've just put these rectangles around to show levels of consolidation, which also becomes support and resistance over time. So we're looking at this to get an idea of where could the market go in the short term, in the next day or two. This also shows us by this candle size the range. And so that's the range of an entire day. So you're not going to say, hey, it could possibly go all the way up to 43.05 in one day. Very unlikely, because you can see the kinds of ranges that have been happening. So visually, you can sort of say, if we doubled the range here, it might go to 42.55. Also, we want to see how volume is doing relative to price action. So that's why we have volume on the bottom of this chart. And that's our long-term look and our patterns look as well. The next thing we're going to look at is inventory. Now, there's a lot of different ways to look for inventory or to find it. I'm going to show you just one. Inventory is a hard indicator to find. You can have it in NinjaTrader. It's sometimes called the cumulative delta. So sometimes it has different names, but it's all tracking current inventory. And this gives us an idea of what the smart money is doing. So here we have a 60-minute ES chart, and what you're looking for here is divergence. So you can see that this is called the order flow cumulative delta. Order flow cumulative delta, and is a NinjaTrader tool. And that being said, it may be called inventory in your trading package, but you're trying to see what happens when price goes up. So on this day, price went up big and inventory went up big. And that makes sense because inventory is measuring the number of outstanding contracts at any given time. So when you buy, you are creating a contract. So the number of contracts goes up by +1. And you sell, that pulls an inventory out, that pulls a contract off the market, and the inventory goes down by 1 contract. So when this is going on collectively, we can tell what's going on. Are people pulling contracts out? Are they putting contracts on? Are they building new contracts? Or are they taking old contracts and taking them off? That's what this measures. Now, under normal conditions, this is correlated. So price movement up should mean inventory up. Now here we had price movement up. You can see here's the open, and there's the close on that day. So it was positive price action. But if we look at the close, it was just barely positive. So those are actually correlated. However, we can go back a few days, and you'll see on this particular January 31st, we had a nice up day, but look at inventory. Now, this last bar here is the 5 o'clock bar. We're not interested in that. We're only interested in the 4 o'clock close. So we had a big upside right there. We have a big day up. We look at the inventory right there, and it's actually, it's just barely minus 92. So this was one case where it was not correlated. When it's not correlated, price went up, but the inventory either barely budged or was down, means that people on balance were exiting as price was going up. This is the smart money getting out, or the smart money taking profits. Okay, so this gives us an idea of what the smart money is doing in anticipation of something. Like this is the Thursday before that big employment number. Here we can see that everybody is buying in anticipation of anticipation. Actually, this is you got the wrong day. This is Thursday. And a lot of people took profits. A lot of people take profits. So I would say that this is Thursday, this is Friday. We actually had some divergence here. We had this coming down, and we had the price moving up. So right there to right there, that's divergence. So this shows that a lot of big money was getting out of the market, even though this was a big run-up on Thursday, in anticipation of the unemployment numbers on Friday. So this sort of gives you an idea of what this smart money is doing. It's very important that we know that. The final chart I'm going to look at is an intraday chart. I'm looking for the short-term levels that are on a very short-term chart. Those will be support and resistance, and those will be of interest. So I've got some horizontal lines here on the short-term chart. My short-term chart will look slightly different when I show you this, but I tried to simplify this to just have the minimum information. And these are what I call Troy levels. It's one of my products. It's available on my website if you want to check it out. However, I usually use these levels in the morning brief, at least just for the ES. And so these are levels of support and resistance, and this indicator will automatically populate your chart with these levels. That being said, you don't have to use my levels. You can use anything. You can use double tops, double bottoms as potential support and resistance. You can see here we could have had a little double bottom right there. Would have been a nice spot to be going long. A triple bottom, also a nice spot. 50% fib when it bounced was a great spot as well. Those are going to be levels of interest. Okay, you can obviously do these in advance, be in the pre-market, and we will do that in the morning brief. That being said, and that completes our discussion on the morning brief information or morning routine. Now, you should be doing this for every single tool or instrument or symbol that you're trading. So every market that you're trading, whether it's the 6A for the Australian dollar or it's the NASDAQ for the NQs, you should going through news looking for things that will affect those markets, looking at a long-term chart for support and resistance, patterns, etc., as well as checking out the inventory and short-term impacts of short-term patterns, as well as support and resistance. That's what you need to be doing for every market that you trade. We're just covering the ES here at oneononetrading.com. Hope you have a great day and happy trading.